Good morning, everyone. Welcome to Windsor Brokers live daily market outlook. Today is Monday, the 3rd of September 2012. I think the summer is over now. We are in the new month where more action most likely will be seen. Actually, the action started from last Friday. Jackson Hole's symposium of central bankers, and will continue during this week with a number of central bank events. With the main focus, I would say, on ECB as recent over 1 month positive tone that dominated on euro dollar and pushed the price from 120 zone, dangerous 120 zone, up to 126 was a result of speculation of the investors that first of all the possibility of Fed's further action for a quantitative easing, and number 3, that basically Bernanke disappointed the number of investors by his not clear policy, not announcing basically anything rather than carefully watching and possibly acting in case of necessary steps to be done. This is what we mentioned last Friday, that chances were 50-50, and there was a lot of sort of opposition in this case that were expecting Bernanke even to say there will be no further quantitative easing, or that will not be announced directly, rather than watching closely. This reminds us also on the previous ECB chief Trichet, that was probably using the similar wording in this case, that will be watching carefully and so on. Anyway, the focus now turns towards the ECB as the time is running out, and some action must be taken in order to prevent some more disastrous scenario. The meeting is on Thursday, and most of investors are basically now awaiting this as one of the key events for during this week. From today, the rather quiet movements during the Asian session, especially on euro-dollar, consolidating its last Friday's rally, when the pair briefly broke above psychological 126 barrier, but showing not much of the gains, as 126.36 was the peak, and the price quickly reversed down, slid below 126. It's still the downside still basically remains vulnerable as long as 126 and 126.36 stay intact, and more of this actually we will see on our technical part. While dollar was broadly under pressure after last Friday's Bernanke's speech, pushing dollar yen to fresh lows and testing the upper boundary of a strong support zone and base at 78.15, 78.00, with dollar Swiss also dipping down to 95.00 psychological support that was touched last Friday, and a brief consolidation at around the 95.50 zone is now underway. Rather sideways movements seen from the beginning of the new week and the Asian session. From commodities, crude oil remains quite well supported, benefiting from last Friday's dollar's weakness and bouncing from the zone of 94 that was hit last Thursday, again regaining levels close to 97, 96, 90 was the highest seen last Friday, with the improving tone seen on the near-term outlook, although some overbought conditions seen at this point, seeing more prospect towards the upside. From the other side, the yellow metal also bounced sharply on Friday's comments of Bernanke, moving away from the dangerous 1650 support and bouncing as high as 1692. So basically we are now close to our medium-term target at 1700, as the yellow metal managed to find the base around 1650. This was mentioned in our previous sessions as a quite important support. 1650-40 area that basically contains 1646 was the low seen, and the fresh rally now is turning a focus towards the upside, and our target at 1700 from today's calendar, despite that United States are closed due to Labor Day holiday. A number of data seen from basically from Asian countries that we are going to take first. The retail sales from Australia came in quite disappointing, minus 0.8% compared to plus 3% forecast, and 1% of the month of June, dragging the Aussie dollar against US dollar significantly lower. Additional pressure was also put from China's manufacturing PMI for August, that also came below the previous release at 47.60, showing some stagnation in the Chinese economy's growth. That basically was one of the reasons that Aussie dollar dipped significantly at the opening of the session. We have seen the gap lower opening at 102.94 compared to last Friday's closing at 103.36, with the pressure still seen towards the downside as the pair dips as low as 102.38, and quite significant is now break and close below 200 days moving average. That we are going to take a look later on in the technical part. At 7:15 GMT, I think already released retail sales from Switzerland. We're going to take a look, as the calendar hasn't been updated yet. 3.2% in July compared to 3.7% in June. Still quite a good release compared to 1.2% forecast, and Swiss PMI is due in at 7:30 GMT for August. 49.2 improvement seen as the forecast compared to 48.6 release of month of July. Germany's manufacturing PMI, a series of PMIs that are due to be released today, is due at 7:53 GMT. We don't have forecast. 43 was the previous one, while Eurozone August manufacturing PMI is due 5 minutes later at 45.3, unchanged compared to previous release. And at 8:28 GMT, UK's manufacturing PMI 46.2 compared to 45.4 of previous release. Slight improvement seen, but still all the indicators are still holding well below 50, seen as a break point, the level that separates contraction from growth. The ECB President Draghi is due to have a speech at 13:30 GMT, and that will be all from today. For today, as said earlier, US is closed due to Labor Day holiday. We're going to take a look now at our technical part and see the latest movements and the forecasts and expectations for today and the coming days. First, with the single currency against the US dollar, as shown last Friday's strong rally peaked at 126.36, but failure to hold gains above 126 as a psychological support resulted in a fresh dip down to 125.60 zone. That was the overnight's low, with the rather neutral sideways movements seen as from last Friday's closing until now. Range is 125.85 and 125.60, quite a narrow week, still weakening hourly. Studies are all pointing lower. Keep the downside vulnerable at this point, with possibility of a further slide not ruled out, as the also 4-hour chart studies seem to be losing momentum. Our important support, immediate support, pardon, stands at 125.59. That is the overnight's low, reinforced by 20 days exponential moving average at 125.50 and Fibonacci 23.6%, while more significant support we have at 125 zone, where is the higher base at 124.92 from Thursday and Friday. 38.2% retracement of the up leg from 122.54 to 126.36. As well as 55 days exponential moving average. And in order to keep the short-term positive tone in play, I would say any stronger dips should ideally be should be basically contained at these at or above this level to prevent further slide, as loss of 125.00 and 124.64 that marks the short-term consolidative range floor might see risk of further extension lower. On the upside, of course, break above 126 and 126.36 is set to trigger fresh leg higher as a part of the 1 month rally from 124th of July low at 120.42 and expand towards 127, seen as the next upside target. 126.91 peak of 29th of June and 127.00 as a round figure resistance. So far, rather positive tone is still seen on the daily chart as the pair broke above 90 days moving average, seeing more potential on the larger picture, seeing still more potential towards the upside. Ideally, as said, consolidation and correction and reversal at any level above 125 would keep the short-term bulls in play. The British pound is in consolidative mode following last Friday's upside rejection just under 159.00 and off the previous peak at 159.11 posted on 23rd of August. The short-term rally from 2nd of August 2012 from 154.89 remains in play, as the latest dip was contained by ascending trend line at 157.80 zone, and the current upside rejection still sees risk of possible further easing as part of correction, as the hourly studies are still, despite being in the positive territory, still pointing lower. Ideally, reversal and base at overnight low at 158.50 would keep the upside, immediate upside in play, and with break below above 159.00 and 159.11 to signal a resumption. Any further easing below 158.50 would directly threaten test of 158.00 trend line support, and more also significant levels 157.69 and the 157.50 low of 28th of August, also 38.2% retracement, and basically break of this level would see risk of confirming the double top pattern seen on the 4-hour chart and allow for deeper reversal. Anything above 158 will be signal for possible fresh attack at levels at 159 and 159.11, as daily studies are still rather supportive, and 61.8% retracement of the broader 163.00, 152.67 now acts as a main barrier, break of which is to open way towards 160 as the next psychological resistance. Dollar yen has said lost ground again following a break below 78.44 and 78.27 lows, so far testing 78.15, the upper part of the stronger support band, and the base at 78.00. Negative tone continues to dominate on the lower time frames. Of course, the overextended conditions on the hourly chart resulted in some corrective action towards the upside, 78.35 seen so far. However, I wouldn't expect much at this point, as long as a minimum 78.60, 78.65 stays intact, with more action towards the upside seen on a break of our key near-term barriers at 78.80 and 79.00. That would prevent the pair from further sliding. Basically, it will turn the focus higher. These levels mark previous range top, approximately also 38.2% retracement and 61.8% retracement, and round figure resistance at 79.00, break of which is required to turn focus towards 79.65, recent peak posted on 20th of August. As said, the negative tone is still dominating on the lower time frames. More risk is seen towards the downside, as break below 78.00, 77 and 90 would directly open with the open way for a fresh extension of the broader downtrend from 84.17 and look for test of another key support at 77.65 low of 1st of June 2012. And from currencies, finally the Swiss franc dipped last Friday to 95.00 as a part of a broader descent from 99.70, the peak of, pardon, we don't see it here, 99.70 peak of 24th of July 2012 with exactly 50% of the latest rally from 90.41 to 99.70 seen on last Friday's dip to 95.00. So we have quite a good support at this point, but still a negative tone seen on the lower and higher time frames. Do not see much prospect towards the upside. Current corrective action regained so far 95.60 level with the 55 descending 55 days exponential moving average still seen as a quite strong barrier just above the current price, and also significant 96.00, 96.15 zone ahead of 96.34 seen as a key barrier, 28th of August peak. Basically only break above this level would provide relief and prevent pair from further sliding in favor of some stronger correction of the larger 99.70 to 95.00 down move. Otherwise, any failure under at the minimum, let's say 96.15 would see the direct risk towards 95.00 and another important static supports at 94.61 and 94.20 ahead of very strong support at 94.00 that marks round figure support, 200 days moving average and the 61.8% retracement. As said at the beginning, the oil is in the ascending mode following last Friday's announcement and the broader dollar's weakness that pushed the price from recent lows at 94 zone and regaining so far levels close to 97.00. This improves the current short-term negative tone that was established from 98.27 peak of 3rd of August as the oil dipped to as low as 93.94, marking 38.2% retracement of the up move from 86.91, 86.91, that's correct, to 98, pardon, 27, with the near-term focus now turned more towards the upside as the 20 days exponential moving average crosses above 55 day one and the price breaks above 96.50 recent consolidation range top. More potential seen towards the upside, break above 97 to open 97.70 and then our key barriers 98.00 and 98.27. Still I would say a still unclear situation on the 4-hour chart with the more positive tone seen on the hourlies. The pair also the price also broke above main bear trend line at 96.13 and so far holding above this level despite some corrective action seen on overbought conditions. I would say ideally reversal above the trend line which is around 96.00 would keep the immediate focus towards the upside, and the levels at 97.00 and then 97.50-60 zone ahead of more significant 98.27. I would say only risk the risk would be seen on loss of 96.00, where is also the 55 days exponential moving average that will delay immediate bulls and turn more focus towards the downside. And finally, a quick look at Aussie dollar as it suffered quite heavy losses from Ichimoku studies. We can see that top of the daily Ichimoku cloud that is around 102.60 has now been broken. The price penetrated into the cloud, seeing now more risk towards the downside. On the daily chart, a break and close below 200 days moving average now increases potential for further easing as the studies broke below their midlines and now see risk for a test of 102 zone, where it's 38, approximately near this is 38.2% retracement of the up move from 95.79 to 106.12, and then we have 101.86 90 days moving average, and the static support low of 25th of July at 101.75. Hourly structure sees quite a negative tone and quite extended conditions at this point, following overnight's gap lower opening, with brief consolidation seen so far, not lasting long as the gap is not filled and the price regains minimum 103.50 level. Otherwise, more risk is seen towards the downside, with the also similar situation on the 4-hour chart, although quite extended conditions, yet no giving any signal of reversal, seeing more risk towards the downside. That was all from our side. Now it's your turn. If you have any questions, please you can submit them now. Okay, since we don't have any questions for today, okay, it's just the beginning of the week, I would like to thank you all for being with us, and expect to see you again tomorrow, Tuesday, at the same time at 7:00 GMT, 10 o'clock local Cyprus time. Wish you a nice day and very successful and profitable trading. Good luck.